Be Wealthy and Smart, episode 1538.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about what can we expect during Fed Week, because this week the Federal Reserve is meeting and we should get a decision from the Fed about interest rates. We're not expecting rates to change unless something is dramatically different with the second quarter gross domestic product report or the personal consumption expenditures price index report, which is the central bank's preferred measure of inflation. And we also have the July jobs report coming out. Scott Helfstein, head of investment strategy at Global X, said, "Next week is a bit like the Super Bowl, World Series, and Stanley Cup all rolled together. It will be a lot for markets to process in a short window. Growth may well come in above forecasts that built in drag from tariffs, yet to really materialize. Meanwhile, job growth is slowing, but has also consistently beat expectations," he said. As for the Fed, Chair Powell has signaled an intent to hold rates steady and wait for more data. Yeah, some of the data that came in include the durable goods orders. According to Census Bureau, new orders for manufactured goods made to last 3 years fell 9.3% from May to June to $311.8 billion. That was better than the 11.3% drop economists expected. Excluding transportation, new orders were 0.2% higher. Excluding defense, orders were down 9.4%. June's durable orders decline marks a sharp contrast to May's 16.4% surge. In June, transportation equipment orders fell 22.4%, the biggest decline since the onset of the pandemic. That was reportedly due to Boeing orders declining. As we know, the Federal Reserve has a dual mandate of price stability and maximum employment, and both sides appear to be on solid footing right now. The CPI report showed a slight acceleration in inflation, but the data was in line with economists' expectations. And now the June jobs report confirmed a still healthy labor market. According to the Bureau of Labor Statistics, non-farm payrolls rose by 147,000 in June, which was a bit higher than May's upwardly revised 144,000 figure, and more than 110,000 new jobs that economists had expected. The unemployment rate ticked slightly lower to 4.1%. The next jobs report will be released on Friday after the Fed meeting. According to Federal Reserve Chair Jerome Powell, he said the Fed won't cut interest rates until it has a better understanding of how higher tariffs affect longer-term inflation expectations. And because price effects from tariffs take time to work through the supply chain to the consumer, it's not likely that that will be soon. The Fed's policy decision is due Wednesday, July 30th, and it's not expected to change. Traders are expecting, however, 1 or 2 cuts in September. Higher interest rates are impacting the housing market. The average sales price of a new home that was sold fell 2% from May to June to $501,000, but was 1.1% higher on a year-over-year basis. On Wednesday, the National Association of Realtors said that existing home sales were down 2.7% from May to June to a seasonally adjusted annual rate of 3.93 million. Economists expected 4.01 million. NAR chief economist Lawrence Yun said high mortgage rates are causing home sales to remain stuck at cyclical lows. If the average mortgage rate were to decline to 6%, our scenario analysis suggests an additional 160,000 renters becoming first-time homeowners and elevated sales activity from existing homeowners. Charlie Doherty, a senior economist at Wells Fargo, said the slight gain, which follows a sharp contraction in May, reflects weak buyer demand resulting from challenging affordability conditions and heightened economic uncertainty. The stock market started off higher on Monday, signaling a positive start to Fed Week. Lifting sentiment is news that the U.S. has reached a trade deal with the European Union, which will impose a 15% tariff on most goods sent to the U.S., including automobiles. And of course, the stock market reacts mainly to earnings, and it's a jam-packed week for earnings. Among reports we're expecting this week are from Amazon and Apple, which are both due after Thursday's close. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.